This is what happens when a luxury yacht becomes cheaper than the boat most people buy to cruise around a calm lake with a cooler and a Bluetooth speaker. Right now, heading into 2026, the boat market is producing price tags that look completely fake. Because in a normal world, a 40 to 60-foot yacht is supposed to cost more than a pontoon boat, a lot more. But that's not what's happening anymore. In this market, you can literally spend a pontoon money and end up owning a yacht with cabins, multiple engines, a galley, a flybridge, and enough systems on board to keep a marine technician employed full-time. And yes, the boat market is officially broken. Stay until the end, because the reason these yachts are suddenly cheap is the part that catches people off guard, and it's also the reason most buyers are going to regret chasing these deals. Let's start with the numbers, because the numbers are the whole story. There's a classic example that sums up this entire mess perfectly. A 1978 Hatteras 58 motor yacht, a real American-built yacht, 58 feet, multiple staterooms, big heavy fiberglass hull, the kind of boat that used to be considered untouchable luxury. And that yacht has been listed around $70,000 to $80,000 after price cuts. Let that sink in, because when it was new, the inflation-adjusted price would be close to $1 million. And now that same level of yacht is being sold at a price that competes with a brand new pontoon. Now look at the other side of the comparison. A 2025 Harris Solstice 230, 23 feet, luxury tri-toon layout, modern seating, premium finishes. This is not some entry-level aluminum barge. This is a high-end pontoon. And the typical list price lands around $107,000, meaning a brand new pontoon can cost more than a 58-foot yacht. That is not supposed to happen, ever. But it's happening. And it's not just one yacht, it's not just one listing. This pattern is showing up everywhere once you start looking at late 70s, 80s, 90s, and early 2000s luxury boats. A 1997 to 1999 Sea Ray Sundancer 400, 40 feet, twin engines, full cabin, the kind of express cruiser that people used to dream about. You can find them around $90,000 in the market right now. And at the exact same time, a fully loaded 2025 Bennington QX Series pontoon, 27 to 30 feet, can exceed $200,000 MSRP. That's the pricing overlap. And if you're new to boating, you're probably thinking the same thing everyone thinks the first time they see these numbers. How is that possible? How does a yacht get that cheap, and how does a pontoon get that expensive? Here's the short answer. Yachts didn't become worthless overnight. Pontoons didn't become gold bars overnight. What happened is the market got shoved in two directions at the exact same time. Used yacht prices collapsed while new boat prices climbed, and then financing costs slammed the entire market in the face, all at once. That's how you end up in a world where a yacht costs less than a pontoon. And the scariest part? This isn't even the bottom for some segments. Because the boat market heading into 2026 is still digesting the aftershock of the pandemic boom, and that boom distorted everything. If you want to understand why this is happening, you have to go back to the moment the boat industry lost its mind, 2020. The pandemic hits, life shuts down, travel gets weird, people want something they can do outside, and boating suddenly becomes the perfect escape. So demand explodes. Manufacturers can't keep up, dealers can't keep inventory, waiting lists stretch out, and people start paying whatever they have to just to get something with a hull and a motor. That's what created the boating frenzy. And it wasn't just seasoned boaters upgrading. It was a wave of first-time buyers jumping in, a huge wave. The industry ramped up hard to meet that demand. They built more boats, they pushed more inventory, they expanded production, and for a while it looked like boating had entered a new era where sales would just keep rising forever. But then reality showed up. Inflation hit, prices climbed, interest rates climbed, and the market flipped faster than anyone expected. Instead of scarcity, we got oversupply. Instead of we can't keep boats in stock, we got boats sitting for months. And once that shift starts, everything changes, because the boat market does not forgive overproduction. It punishes it hard. And now, heading into 2026, we're looking at the consequences. The used market is flooded, and not just with old boats, with nearly new boats, late model boats, boats that were bought during the pandemic boom and barely used, boats still under warranty in some cases. And when thousands of those hit the market at the same time, it creates a simple situation. Too many boats, not enough buyers. And that's where the broken part begins. Because in 2025 and into 2026, buyers suddenly got leverage back. They could negotiate again, they could wait, they could walk away. And sellers who needed out had to cut prices until someone finally bit. So yes, yachts started dropping into ridiculous territory, but the pontoon side of the market didn't follow the same path at the same speed, because pontoons did something quietly dangerous over the past few years. They moved up market, hard. What used to be a simple floating platform turned into a luxury product category.
Luxury pontoons now come with tri-tune hulls for better performance, high horsepower outboards, premium upholstery, massive screens and electronics, water sports capability, and layouts that look like something out of a lounge. They became lake limousines, and the price tags followed. That's how you get pontoons selling well into six figures. And that's how you end up with the most ridiculous sentence in boating today. A brand new pontoon boat can cost more than a luxury yacht. And the moment people realize that sentence is true, the next thought is always, why wouldn't I just buy the yacht? And that question is exactly why you need to understand what's really going on here. Because the purchase price is not the cost. The purchase price is the trap. And if you don't understand that, this market is going to eat you alive. Let's break down what the market looks like right now, because the price overlap is real and it's expanding. You can find 30 to 60-foot yachts from the 1980s, 1990s, and early 2000s sitting at prices that overlap directly with new pontoons, sometimes low six figures, sometimes under $100K, sometimes, shockingly, even lower. And these aren't tiny boats. These are boats with serious capability and serious space. Flybridges, multiple cabins, full galleys, real heads, twin inboards or diesels. They're not comparable in size at all, which is why this feels so broken. Now compare that to what new pontoons cost. A basic new pontoon from a respected brand can start around 30 to 50K, but once you step into luxury pontoon territory, you're no longer in the same price universe. A high-end pontoon can easily push past 100K, and fully loaded flagship models can go far beyond that. So you end up with a buyer who says, wait, I can either buy a 25-foot pontoon or a 45-foot yacht. And on paper, the yacht looks like the deal of a lifetime. More boat, more space, more prestige, more capability, and sometimes even a lower purchase price. But here's what the market is actually doing right now. It's not saying yachts are a better value. It's saying yachts are harder to own, and the price is adjusting to reflect the pain. That's the part most people miss. Because yachts don't depreciate like normal consumer products. They depreciate like liabilities. They don't drop because they got worse. They drop because they got expensive to keep alive. And as the market tightens, the buyer pool for old yachts shrinks fast. Because the reality is simple. A luxury yacht is not a bigger boat. A luxury yacht is a lifestyle purchase with permanent recurring costs. And those costs don't care what you paid. That's why these yachts get cheap. They aren't being discounted because they're not nice. They're being discounted because the ownership math is brutal.
And in this market, brutal math is the strongest force on the water. So what forces created this moment? It's not one thing. It's a convergence, a perfect storm of oversupply, financing pressure, demand shifts, and ownership cost reality. Let's go through it. First big driver, oversupply. The post-pandemic boat boom created a flood of inventory that the market is still trying to digest. Manufacturers ramped up heavily, dealers stocked up, and now that demand cooled off, boats are sitting. Used boats are piling up, and a massive wave of nearly new boats is hitting the market as owners exit. That matters for yachts because larger boats already have a smaller buyer pool. A 23-foot pontoon can be purchased by a huge range of buyers. A 40 to 60-foot yacht, that's a smaller group. That's a more committed buyer, and that buyer usually needs financing, insurance, and a place to keep it. When any one of those becomes difficult, the buyer disappears. And when the buyer disappears, the yacht sits. And when the yacht sits, the seller cuts the price, again and again, until the yacht becomes cheap. Second driver, cooling demand and shifting preferences. A lot of people discovered boating in the pandemic, but as life normalized, people changed what they wanted. The modern buyer wants ease. They want low hassle, simple systems, quick use, easy storage, easy maintenance, family-friendly layouts, and that points straight toward pontoons. Pontoons fit modern recreational boating perfectly. They're versatile, they're comfortable, they're easy for first-time owners, they can be stored at home if they're trailerable, they can be used every weekend without turning into a project, and they don't require a full-time commitment to keep running. Meanwhile, older mid-sized yachts appeal to a more specific buyer. And that buyer has to want the entire lifestyle, not just boating. Dockage, maintenance, repair surprises, insurance requirements, the whole thing. And the pool of people willing to do that has shrunk. Especially among younger buyers who are more likely to prefer shared access, boat clubs, or fractional ownership instead of full ownership. So demand shifts towards simpler boats, which supports pontoon pricing and weakens yacht pricing. Third driver. Rising new boat costs. New boats got more expensive, not by a little, by a lot. Inflation pushed materials up, supply chain issues pushed components up. Manufacturers raised MSRPs repeatedly during the boom. Some builders doubled or tripled prices over the past few years, and by the time the market cooled, a lot of new boats were priced for the 2021 buyer mindset, but they were being sold to the 2025 and 2026 buyer reality. And that doesn't work. Add tariff concerns and ongoing cost pressure, and it makes new boats even harder to justify. So buyers do what buyers always do when prices go up. They go used. That's why pre-owned purchases became dominant on major platforms. This isn't a small shift, it's a massive one. Because when most buyers go used, it creates even more pressure on new boat pricing, and it creates intense competition among sellers, which is why used luxury boats drop so aggressively. Fourth driver, interest rates. This is the one nobody escapes, because boats are usually financed, especially new boats, and when rates climb, the monthly payment becomes the real price, not the sticker. The average boat loan rate jumped from roughly the mid-4% range in 2022 to nearly 7.8% by 2025. That's a brutal change, and it destroys affordability fast. The same boat can go from a manageable payment to a payment that kills the deal just from interest rates. And buyers don't emotionally react to APR, they react to the monthly number. If the monthly number is too high, they stop shopping, or they downgrade, or they go used, or they walk away. And it gets even worse for older yachts because of a financing reality that quietly crushes this entire segment. Financing barely exists for boats over 15 years old. That's a huge problem, because most of the cheap yacht deals people are seeing are well over 15 years old, 1980s, 1990s, early 2000s, meaning many lenders won't touch them. So what happens? Sellers are forced to wait for cash buyers. Cash buyers have leverage. Cash buyers offer less. Cash buyers can negotiate hard. And cash buyers are picky, so prices drop until the yacht reaches a level where a cash buyer feels like they're stealing it. That is how you get a 40 to 60-foot yacht priced like a pontoon. And now we reach the part that makes this entire situation make sense. The reason the yacht is cheap is because the purchase price is the smallest part of the cost. That's the truth nobody wants to hear. A depreciated luxury yacht can be affordable to buy and financially violent to own. The cost to run these boats doesn't scale down just because the resale value collapsed. Slip fees don't care what you paid, insurance doesn't care what you paid, maintenance doesn't care what you paid, fuel doesn't care what you paid. The boat got cheaper, the lifestyle didn't. And that's where the market breaks people. A rough rule that gets repeated over and over in boating is that an older large yacht can cost around 10% of its value every year just to keep it running. But here's the catch. That estimate is based on the yacht's real class and complexity, not the depressed resale price you found online. A 60-foot yacht that was built for million-dollar ownership budgets still comes with million-dollar ownership costs, even if you bought it for $80K. And when you start stacking the real numbers, it gets ugly fast. Dockage for a large slip can be anywhere from thousands per year to tens of thousands per year, depending on location. Insurance can be thousands or far worse depending on risk factors, location, and the boat's age. Maintenance and repairs can consume tens of thousands. Fuel can easily run into the five figures depending on usage. And if the boat requires professional help for operation or insurance qualification, crew costs can explode the whole budget. This is why so many cheap yachts end up sitting, because experienced buyers already know this. They aren't shopping the yacht, they're shopping the ownership burden, and they want a discount big enough to justify that burden. That is what the market is pricing in. Now compare that to a pontoon. A pontoon is the opposite ownership equation. You can trailer it, you can store it at home or in a storage lot. Insurance is usually manageable. Maintenance is relatively straightforward. Outboards are straightforward compared to complex yacht systems. Fuel burn stays reasonable because you're pushing a lighter boat, and the entire lifestyle remains controlled. That's why pontoons became the perfect boat for the modern buyer. It's not about luxury, it's about sustainability. It's boating without the financial hangover. And that's why this market can price them aggressively, because people know they can actually keep them. So here's the paradox that's breaking everyone's brain. Luxury yachts are selling cheap because the market is terrified of the ownership cost. Luxury pontoons are selling expensive because the market is confident in the ownership simplicity. That's the inversion. That's the broken part. Now let's zoom out and talk about where this market is going into 2026, because a lot of people think this is a temporary glitch. It's not just a glitch, it's a correction. The pandemic boom pushed used boat prices up hard. Some estimates put the surge around 30% from 2020 through 2023. Then prices started falling as inventory built up. By 2024 and 2025, used values softened and continued adjusting down. And as this happened, the correction wasn't even. Some segments dropped harder than others. Some categories got hammered. Other categories held better. But the older mid-size luxury yacht category got hit by every force at once. Oversupply, demand shift, financing limitations, high operating costs, buyer skepticism. So that segment became the deal zone, which is why the listings look insane. Meanwhile, pontoons have been a weird outlier. Yes, the segment cooled from its peaks.
And yes, discounts and incentives started appearing, but pontoons still align with what most buyers want, and that demand stability supported higher prices, especially in the premium tri-toon category. So you end up with a situation where pontoons' MSRPs can still look inflated, while used yacht prices look like liquidation. And for buyers, that creates a moment that feels like an opportunity, because it is, but only if you understand what you're actually buying. Here's the honest breakdown of what each purchase really means in 2026. If you buy the depreciated yacht, you're getting massive space, multiple cabins, real cruising capability, prestige and presence, a yacht experience for cheap upfront. But you're also buying aging systems, outdated electronics, complex mechanical work, harder insurance situations depending on location, higher dockage costs, higher maintenance costs, and potentially no financing options. You're getting the boat cheap because the market is charging you later. If you buy the new luxury pontoon, you're getting a full factory warranty, modern systems, simple maintenance, easy storage options, lower operating costs, easy family use, high resale liquidity compared to old yachts. But you're also paying a high upfront price, premium financing cost if you borrow, and you'll take depreciation early like any new purchase. So the pontoon is expensive upfront, but safer long-term. And this is why the decision is not which one is cheaper. The decision is which one can you actually afford to own. That's the only question that matters in this broken market. Because this market is filled with traps disguised as deals. And the biggest trap is thinking that a $70K yacht is a $70K purchase. It isn't. It's the down payment on a lifestyle you have to fund every single year. That's why some owners get desperate, because when the costs pile up, the yacht becomes hard to unload, especially when buyers can't finance it. So sellers cut the price, then they cut it again, then again, and sometimes they still can't get rid of it. That's where the market gets dark, because some boats don't just depreciate, they get abandoned. And when that happens, it's the final proof that the market isn't about luxury anymore. It's about survivability. And survivability is the real reason pontoons keep winning. Now, the boat industry itself has been openly signaling this correction. Dealers have talked about inventory sitting longer, discounts deepening, used sales rising, and profit margins shrinking because dealers are moving inventory more aggressively. That's what a normalization looks like. The market is functioning again, but it's functioning in a way that punishes the wrong type of ownership. It punishes over-leveraged buyers. It punishes impulse pandemic purchases.
It punishes boats that are expensive to keep alive, and it rewards buyers who can pay cash for a deal and absorb the ownership costs. That's why this market is producing these weird headlines. And that brings us back to the title. Luxury yachts are cheaper than pontoon boats now. The boat market is officially broken. Because the truth is, the market isn't broken randomly. It's broken in a very specific way. It's broken in a way that exposes what boating really costs. It reveals the difference between buying a boat and buying the ability to keep it. And heading into 2026, that difference is separating the winners from the people who get crushed. So what should you actually do if you're looking at this market and thinking about buying? Here's the smartest way to frame it. If you're looking at a cheap yacht, don't ask, how much yacht do I get for the money? Ask, how much ownership burden am I about to inherit? Because that cheap yacht might be cheap for a reason you can't see in the listing. The seller isn't just discounting the boat, they're trying to transfer the problem. And sometimes the problem is normal. Sometimes it's just aging and depreciation. But sometimes it's insurance difficulty. Sometimes it's financing impossibility. Sometimes it's endless maintenance. Sometimes it's dockage cost that makes the whole boat unusable. And those are the kinds of problems that don't show up in a glossy listing photo, but they show up in your bank account on repeat. And if you're looking at a luxury pontoon, don't ask, why does this cost so much? Ask, what am I paying for? Because in 2026, you're not just paying for aluminum tubes and seats, you're paying for reliability, warranty coverage, lower ownership risk, usability every weekend, and a lifestyle that doesn't require you to become a part-time mechanic. That's what the market is rewarding, and that's why the pontoon stays expensive, even when it feels ridiculous next to a used yacht listing. Now, will this anomaly last forever? Probably not at this level, because the industry is moving toward stability. Inventory levels are normalizing, pricing is settling, and brokers going into 2026 are describing the market as healthier and more balanced than the chaos of the last few years. That means some of the extreme deals may start disappearing as buyers absorb the oversupply. But here's what won't change. Older yachts will always face heavy depreciation because the ownership cost doesn't age gracefully. And pontoons will remain strong because they match modern demand. So even if the gap closes a little, the underlying structure is still here. Big used yachts will still be cheap relative to new boats because the market isn't paying for the boat, it's paying for the pain.
So the real question isn't whether the yacht market is broken, it's what the break is showing you. And what it's showing you is this: the purchase price is no longer the barrier to owning a yacht. The operating cost is. That's why a luxury yacht can be cheaper than a pontoon boat, because the market finally stopped pretending that ownership is just the price tag, and it started pricing in reality. So if you're watching these listings and thinking about jumping in, here's the final takeaway you need to remember. A cheap yacht is not cheap boating. It's cheap entry into expensive ownership. And that can be an incredible deal or a financial disaster, depending on whether you actually understand what comes after the purchase. Because in this market, you're not buying a boat, you're buying the ability to keep it. And the water doesn't care what you float on, but your bank account definitely does.